the Steve train.
Hey everybody, thank you for joining us for today's episode of Real Estate Disruptors. Today we have my good buddy Matt Strong with Sierra West Funding, and he flew in from Salt Lake to share how he's flipped over 400 homes and funded over $125 million in hard money loans. It's a crazy amount. If this is your first time tuning in, I'm Steve Trang, and I help entrepreneurs create businesses that support their family, lifestyle, and goals through mentorship. I'm on a mission to create 100 millionaires. If you want to be one of those millionaires, drop me a message on Instagram at steve.trang. And if you're excited for today's show, please give me a wave, give me a thumbs up. And as a friendly reminder, I do not charge a dime for this show. I don't make any money doing this. So here's all I ask. This is what it costs for you to listen to this show. If you get value out of the show, please tell a friend. You can either share this episode right now, tag a friend below, or tell them your best takeaway from the show later on. That way we can all grow together. And this is a live show, so please ask your questions for Matt to answer. You ready?
You got it. Steve, thanks for having me.
Dude, it's my pleasure. I've been excited. I've been bugging you.
I know.
I want to say probably about a year.
Probably about a year, but since
Yeah.
May of last year when we met, right?
Yeah, so this is awesome. So first question, simple question, is what got you into real estate?
I got it first, if it's okay.
Yeah.
You got a lot of swag. I don't have any swag. The only swag I have, so I wanted to bring you a little gift, right? The only swag I have is my team, right? The Utes. So I got you a little University of Utah. I know you're not going to like it, but maybe you can wear it when they're playing Arizona or Arizona State, So anyway, it's the best I could offer. So
I appreciate it. Thank you very much.
Brought you some swag. So anyway.
Thank you. So, but going back to it, what got you into real estate?
So what got me into it is when my wife and I, we were looking for our first house, right?
Mm-hmm.
And so we had just been married maybe a year and a half. And back then, I was in the mindset of I don't want to fix anything. So we were looking for new homes. And so we rolled into this.
What were you doing at that time? What was your career?
So I was working, and this maybe is part of the story. I was working for a guy, and I was working for him. The company was doing self-funded health plans for small to medium-sized companies. Yeah. And so I was just kind of a sales guy, right? And I had just hit where I was on salary making $36,000 a year. It was the greatest thing ever. I just graduated from college, I was salaried, I was this is awesome. Let's go find a house. And so we ended up buying a new home with a local builder, Ivory Homes in Salt Lake, right? And so I decided to go new because I'm I don't want to buy a house that I need to fix up. I don't know anything about that. So walking into the model home, I'm hey, can I get a discount? I don't have an agent. And they said, well, we don't do that, but if you're an agent, we'll pay you a commission. I'm sweet, I'm an agent, right? And so I went and got my license, and that's how I got into real estate, kind of by default, buying my first house. So
trying to save a little bit of money.
So saving a little bit of money. So my first deal really was a no money down deal, right? I ended up getting my real estate license, closing on the house, crediting my commission. They were doing the FHA, we'll pay your closing costs back in the day. This was, I think, 1999 or 2000.
Yeah,
and
they would pay your closing costs and your down payment.
Remember that Nehemiah neighborhood gold stuff that was back in the day? So we got into our first house, no money down. So then I started talking to the sales agent. I'm how much money do you guys make? And they're I don't know, 150 grand. I'm what? You just sit in the model? I want it. I'm in. So I then started working for Ivory Homes, and I already had my license. So I did 4 years kind of sitting in a model home.
You were just kind of floating by, and it's oh, this sounds interesting.
Exactly. And so we can talk about this later, but luckily I maintained a really good relationship with my old boss at the time, because he comes back where he's been one of my main investors, over the years. And so, but I kind of bailed on him to go grass is greener. And so that's the quick story of how I got into real estate. It was kind of by default buying my first house, and then just so then I sold houses out of the model home that was just right down the street from the house we lived in.
That's so fascinating. I just cannot picture you in a new home built community.
Oh, man. It was, for me anyway, it's great for whoever loves doing it, but I just saw myself dying a slow death, right? You can imagine those days in the model. If you leave, someone comes in and you miss that lead, there's not too much you can control. I always felt like it was just selling a really expensive pair of jeans. Yeah. Because people come in, I like the Carrera model. Great. Sweet. Yeah, here you go. It's just order taking.
Yeah. So 4 years, you said?
Yeah, for 4 years.
So what's fascinating is because you're a successful flipper, or at least you used to flip a lot. I believe you
still do. Yeah.
But you bought a new home because you were against flipping. So
right.
Did this working in a new build help you develop a taste for flipping?
Not necessarily. So this is where I've definitely got to credit, my partner that we partnered with for like 13 years. So his name's Matt Storheim. So we were friends from high school, right? And so he had kind of gotten into the arena of working with distressed, or like with bank-owned properties and helping other investors, just as an agent, right? And so I was kind of desperately looking for something that could replace the income that I was used to sitting in the model. And I'm thinking, I can't go get a W-2 job. What am I going to do, right? Because, along the way, you start buying like a new house and
you get
cars
acclimated
and
to a certain lifestyle.
Yeah, right. And so by flipping, it was kind of through that relationship where, I had a home equity line and he's like, you want to try one? So we did our first one together the very end of 2004. And it went well. We made like 20 grand on the house, and I'm doing the math going, okay, I got 10, if we do 10 of them, it's like, this might work, right?
Mm-hmm.
So we did 2 or 3 more while I was still at Ivory at the new home builder. And then I kind of felt like, okay, this might work. And so, kind of when you're selling new homes, at least with them, you could, once someone had paid like a construction deposit,
Mm-hmm.
you'd be entitled to take like 1%, kind of like an advance on your commission.
Yeah.
And so I all of a sudden pulled I had never done it before in 4 years. I pulled all my advances,
Mm-hmm.
because I just wanted as big of a cushion just in case this didn't work out.
Right.
And I remember the sales manager, he's like, so you're quitting, right? And I'm like, no, I'm not. And I made sure I got the checks and they cashed it. I'm like, I'm going to leave now. Because as soon as you tell them you're gone, it's like, great, see you later.
Right.
So we had done 2 or 3 flips, or at least 1 or 2 successfully, and started the other ones before I quit. And then it was just like, like anybody starting something new, especially with, young kids and
Mm-hmm.
a new mortgage, like, you're a little bit terrified of, because you don't know what you don't know, and
Yeah.
it looks like it's going to work. And, thankfully it, we hit the ground running, and it worked out there,
So I heard you say 2004.
Yep.
So you did pretty well probably during the run-up.
Yeah.
On the downturn in Salt Lake, it probably wasn't as bad as it was here, but it probably wasn't easy either.
No, we got our clocks cleaned.
So what happened?
For sure. So it's kind of in a way for different reasons. You have flashbacks, right?
Mm-hmm.
And so sometimes it makes you a little bit more pessimistic or cautious, at least for me now. But yeah, so we were flipping, and man, those were the good old days, right? Like you could just jump on the MLS. I mean, that was my morning. You'd jump on the MLS, decide which ones you wanted to offer on. You knew if you offer on 5 or 10, you were going to get pretty good deals. And you could be done hunting for the week by like Monday afternoon, And so looking back now, obviously it's gotten easier because you have more reps under your belt, right?
Mm-hmm.
But man, that was just like the glory days, right? Prices were so low. It was so easy. There wasn't
Right.
as much competition. So we flipped a bunch, and then it started getting tighter, right? Like the margins started getting tighter. You'd see tons more people down at the courthouse. There's different frenzies for different reasons, right? Like the lending was out of control. Anyone could go get a loan. So where we got in trouble was we kind of abandoned the flip model because it felt like there was scarcity of product. So we kind of thought all overnight we were developers, right? So we had some land deals. We were in the middle of doing some townhomes.
Why not? Some
spec homes. And then, it kind of stopped us in our tracks. So those were dark days, like it was for everybody back then, 2007, 2008. We lost a ton of money. I had a foreclosure. I had short sales.
Mm-hmm.
I mean, it was kind of like, not super fun, right?
Right. Everyone got cleaned out.
Yeah.
So at which point then did you start lending?
So the lending came further down the road. So maybe to just kind of follow in sequence, right? Like, so I still will remember the day, it was July, I think, 10th, 2007. It's always awesome when you're at the courthouse and you're buying properties, but it's not so cool when you see your name on, the list of trustee sales.
I can't imagine that.
So that was like, that was kind of like, it was a mental thing, and I kind of tell the story. It's super true, but this was what, for me, kind of changed my perspective on how things were going. Like I was out interviewing at jobs, right? Like I was like the opposite of abundance mindset and positivity. It was like doom and gloom, not sleeping, stressing about, what's going to happen, how much more money you're going to lose. And one day, I was having a conversation with my wife. We had a brand new Tahoe. I had a new Honda Accord, and I'm like, and the reality is it was a lot further away than what stories I was telling in my head. Is like we're going to lose it all, right? Like, we're going to move in with my parents. We're going to go bankrupt, whatever. And I was kind of like, if we had to live in the Tahoe, and at that time we had 3 kids. My 11-year-old now was like just a baby. I'm like, if we have to live in the Tahoe, would we be okay? And she's just kind of like, yeah, we'd be fine. I love you. And I'm like, it was like at that moment, it was like, oh, like the worst case scenarios, we're going to be fine. And we're living in a Tahoe. I'm like, that's great. So it totally changed my perspective. And then it was like game on. Instead of looking for all the negatives it was kind of like looking for the positives. Exactly. It was like, okay, where's the light? Let's chase it. What opportunities are out there? And naturally, the market was at a prime spot. That's where we just dove right back in and started buying bank-owned houses. So if the glory days were before the crash, really the glory days were, 2009, 2010, 2011. Because after that, after all that, getting rid of the short sales, going through the foreclosure, we jumped back in and started buying. Luckily, along that way, we didn't burn any bridges with our private lenders and hard money lenders. So they believed in us. And what we found really, really quick was first-time homeowners, they didn't know what the stock market was. They did, right? But they didn't know that things were bad for people. They were just stoked that they were now making $13 an hour and prices were cheap, right? So they could qualify for houses that they couldn't before. And so we couldn't buy and sell stuff quick enough. And so it was really kind of weird because we had just gone through this doom and gloom, but there was still a ton of doom and gloom because the stock market was at nothing, right? And we were doing really well flipping houses. And I had my best year up to that point. So the year after or two after my foreclosure.
You were doing really well, went down this dark abyss, and the only thing that changed was your outlook, and
100%.
Everything was good again.
100%.
That's crazy.
And it was kind of accepting the reality of what the worst case scenario was. I heard Sam Zell, right? Total, wealthy investor. He said once, I was at a conference he was at, he says, if you can live with the worst case scenario, then do the deal. And so it's kind of that similar mindset. It's once I realized the worst case scenario is we'd have nothing but a Tahoe and 5 of us living in it. I'm like, it'd probably be okay. Then it, like you said, it just totally flipped a switch. And then you started looking for, the opportunities that you weren't seeing before because you were just too busy worrying about all the doom and gloom.
Right. So flipping dies down. And then flipping at a higher scale.
Yeah.
And then from there, what?
So then we flipped. Me and Matt, we flipped, and then we brought in a third partner, Chris Ramos. And so in our heyday, when it was the 3 of us, we were doing for 4 years in a row, 50 to 60 houses in a year. We were flipping, and so it was just, and 95% of those were MLS purchases. We were just 100% dedicated to the MLS. We had our licenses, so we'd get paid to buy them. We'd list them ourselves. We had at the height there for a few years, we had 6 crews. So each of us would kind of manage 2 of them. And they were just 2-man crews that would do 50, 60% of the work. We'd bring in roofers, window guys, things that they couldn't do. And so then we flipped. And then what had happened is some of these relationships that we were using to fund our deals, they had excess money, and I also had money in a self-directed IRA. And so it was just kind of natural where some people came to us and they're like, hey, well, where are you getting your money? Will you lend it to me? And it was kind of I can't lend it to myself. I think then maybe I had $150,000 and I'm like, yeah, we'll do a loan for you for my IRA. And so for the first year or two, we'd broker our investors' money. And really, it wasn't a business model. It was kind of more just kind of something new and fun. It's let's put this money together. Let's get these people loans, right? And so for the first year or two, it was really not a money-making opportunity other than to deploy our own funds. And then it slowly started to get traction. Our investors ended up having more and more excess money. More and more people kept talking about it. So if you look at kind of the growth from I think we did our first loan is either 2010 or 2011. It's just totally, because been more intentional about it. over the years, made more of a push to raise more money, to then deploy, gotten more involved in networking and kind of getting the word out and stuff like that.
Right. So right now, flipping, how much are you flipping right now?
So it's in an odd world. I'm actually flipping maybe more than as much or more than ever, So now I'm kind of operating, on my own. Mm-hmm. And so I have 8 flips going right now, plus two separate small developments, and then, doing as much hard money lending volume as ever before. So in a weird way, I'm flipping more.
How are you balancing all this?
Well, some of it you get more reps under your belt, so like each flip's not as hard, right? And I've been lucky to have kind of the same crew, that can handle 1 or 2 houses at a time. And they've done so many. It's really kind of like, here's the next house. You already know what to do.
Yeah. It's an assembly line at this point.
Yeah, but I still like going by to check on them because, one, I love seeing the progress and the value creation, and they're great guys, right? So you go high five them, whatever, mess with them and see how they're doing. And, over the years, I've gotten smarter about how to leverage, my time and, it's the who versus the how, or, the who versus the how, get the right person, so I've been more strategic in the contractors that I'm using. So it really can be more of an initial, this deal's good, let's do it. This is the direction we want to head, go with it, type of thing.
For 2019, how many houses would you say you flipped?
So that's the weird thing. 2019, in a way, was a little bit of a transition year with the flips. Because, like I said, my partner that I had for like 13 years, awesome dude. There's no way I would have done even hardly any of it without him. We kind of split ways a little bit. And so it was a little bit of a transition with the flips. So the reality is I maybe only did like 10. I think I'll close like 10 or 11 flips this year in 2019. But I'll probably do 2 to 3 times that. Just based on the pace for next year. That's
just crazy. So one thing that, I think is fascinating. So for you guys that have been, following the show for a while, there's Matt, myself, and Laith Levada in Vegas. And we were all in the Strategic Coach program, which I can't recommend enough. I love the program. It's been really beneficial.
Yeah.
But we're all introducing ourselves. I remember you were on the far side. I was in the middle, and Laith was on the other far side. And Todd Swaggerty was there.
Yes.
And Todd stands up. It's like, I'm a printer. Yeah, I just print for people.
Yeah.
You stand up. It's like, yeah, I'm a broker in Salt Lake or something like that.
Yeah.
I stand up. I'm a broker in Phoenix. And Leigh stands up like, I'm a broker in Vegas.
Yeah.
And we're all in this world. But for whatever reason, we introduce ourselves. I don't know if it's some sort of, want to shy away from judgment. I don't know, right? Because Todd's got Yellow Letter HQ. He's crushing it.
Right.
You're doing really well in Salt Lake. I'm doing pretty good in Phoenix, and Laith is crushing it in Vegas.
Yeah.
But it's also kind of a crazy coincidence that we were all in the same room, because you said you were still going into it, and you're not finding that necessarily.
Yeah. I mean, I've talked with other people at Strategic, and, I just think we were lucky that we all kind of had a similar career path and real estate, especially with distressed properties, and we're all in different markets. So you what are you doing, man? How do we, share with me your secrets and back and forth, So that was way cool.
So, and then you're trying something else right now, or not trying something, you're in something else right now, Genius Network.
Yeah, so that's
Can you talk about that?
That's here local in Phoenix or in Tempe, and I just barely got involved with it, but I was introduced to it from Strategic Coach. Right. So it was kind of like I've benefited so much from Coach, and I re-enrolled in Coach for a second year. And it was kind of like you keep getting a little bit of overlap and cross-marketing, right? And they openly admit that they're cross-selling the program. And so, it's kind of like the gut instinct with, my buddy in Salt Lake, Matt Atkinson. He introduced me to Strategic Coach. And, it's like, and I'm feeling a vibe here with Genius Network, and, I think it's going to be beneficial. I haven't really gone to any meet other than I've joined and I went to their annual event, but I'm super stoked about it, because one thing I haven't, and we'll talk about it, that I have not done well at all is any sort of marketing. And so Genius Network's really kind of at the core, I think it's kind of a marketing and sales and kind of organization, but it's also like a huge network. And, and we'll talk about this too, but over the years, I've really learned slowly, later in life, the value of networking.
Oh, relationships is everything.
And relationships. So the more friends, the better, even if you have to pay for them to start with.
Yeah, for sure, for sure. So Salt Lake population, what's the population there?
Oh, I think the whole state's like 3, but metropolitan like Salt Lake, Greater Salt Lake County is like 1.5, I think, something like that.
Okay, so pretty big, but not
massive.
It's
large. Yeah, sure.
So how many, competitors, peers do you have in that space doing hard money loans in Salt Lake?
So hard money loans, I would say there's probably 3 or 4 that I would say are pretty consistently, you hear them, like, oh, you got your loan from there, or you got your loan from there, right? Like, and there's always a bunch of little, like guys that are maybe just doing 2 or 3 on the side or something like that. But, and so one thing, once I got into more of the networking side of it, I'm like, I want to be friends with everybody, right? So I really try and network hard with even my competitors, which is totally normal for you guys here, which is, people that I talk to are like, don't you collaborate? Like my buddy and Steve, like it seems like they're all competitors, yet they're all on the same team. And it's really cool to see how it works, right? So it's benefited me a ton getting friendly with my competitors because there'll be a deal they can't do, and then they'll call me, or they'll have a deal that I'm a little short on funds, so I'll call them. And it doesn't work with everybody. Some personalities just maybe don't get along with great. But yeah, I mean, I'd say there's like 3 or 4, other local guys that I would consider, pretty solid competitors. There's always some out-of-state randomness that comes in that's, entering the market every once in a while. But,
right. So how do you separate yourself from your competition?
Well, I like to think, so first and foremost, you never want to jeopardize the preservation of capital, right? And the risk of the investor, the money that you're leveraging to loan out, right? Like first and foremost, that is number one, protect that. But after that, I like to think, and I've heard the feedback, so I'm hoping it's true, is like, I want to be the easiest guy to work with. I want to be smart. Like I said, protect the money. But after that, like, it's kind of common sense, right? Like, let's look at it. And this is where flipping first really benefited me, right? Because I can put my shoes I can put myself in their shoes, right? Because I've borrowed money this whole time. I mean, I still borrow money. So I get what it's like to have a deal kind of go sideways. I get that, things don't go always well with the remodel. I get that you're sometimes way more optimistic on the front end, so you can sense the excitement in someone's voice.
Relying on the wholesaler's opinion on repairs.
Right. Yeah, exactly. Right. It could go for up to. Yeah. Yeah, right. Or it could go for as low as, know. So I want to be as easy as possible to work with, right? Like, I mean, we clearly need to know stuff about the borrower and the property, but, I don't need to make them feel all guilty or whatever for applying for a loan. And I like to be quick in my response back to them, because a lot of times when they know that I tell them they're good to go, like it shuts off in their brain that it's like, okay, focus on doing the deal. Don't focus on trying to put it together.
Right.
So I really do try to, and I'm always working on that, try to make everything a little bit more turnkey. So it's just kind of like, hey, Mac, can we do this? It's like, yeah, let's do it. When? Next Friday? Great. Right. I mean, there's a process to everything, but, I think being responsive, being available, and being able to just shoot straight with them, is maybe an advantage I have. There's some things with the mechanics of doing the loan, like how we set up the loan, and maybe if, like deferring payments or LTV, we could talk about, but it might also give us strategic advantage. But I think everybody in Utah anyway is pretty much the same price. So you're not competing on price. I think you're more competing just on service and relationship.
So on that, if you're not competing on price, you're on the, you're in the show right now, you jumped on the plane this morning, flew out here, which I appreciate.
Yeah.
Someone's got to be handling your phone calls.
So
what does your organization look like with you not being physically present?
So, I mean, I'm over at the Eggs USA next door, whatever it's called, grabbing Wi-Fi. USA, whatever it is, grabbing Wi-Fi. This is the thing I love about this business, but it also kind of drives you crazy, but it's coming. Like this morning when I'm like, okay, I think everything's under control. Everything's put to bed.
No, you can't say that.
We got 2 or 3 loans closing this week. It's kind of the week before Christmas, and then it's like I literally have 3 deals in the last 2 hours. They're like, we need to close Friday. And it's like, oh, great, thanks. Like I'll get back to you at 3 o'clock, what I've done with Steve. But the short answer is I do have a full-time assistant that is helping out a ton with the flips and a little bit of the brokerage and evaluating deals, following up on some of the existing loans. But really, I'm the intake for any new leads, underwriting, putting it all together. So your answer is those phone calls I'm taking.
So those 3 that need to close this Friday are new.
Yeah,
these aren't
this
like
morning.
These aren't like, hey Matt, I know we were talking about closing in the 28th. I need you to pull those in. This is not that.
No, it's like, hey, we're supposed to close Friday. It's like, sweet. So just a couple days, no big deal, you know.
I mean, new file,
yeah. So I do have kind of a strategic partnership, and I'm realizing over the years that this is so critical, you know, a local title company that, you know, my kind of setup is, you know, kind of the face, whatever, you know, customer relations, sourcing borrowers, also sourcing investor funds, but then really all the underwriting, putting the deal together, evaluating it, packaging it up, sending it off for investor approval. You know, that's all me. And then I kind of hand it off and say, hey, this is the deal. This is when it needs to close. And then the title company takes it from there. And they're phenomenal. I wouldn't even do any of this without them. They do the docs, the escrow, you know, coordinate to the trust account, investor funds, borrower funds. And I mean, they do all the heavy lifting from that point. But, you know, it's kind of like the thing you got to be prepared for in this business, because we don't have a fund, right? Like you know, if you need a loan, I've got 13 different investors on this side. So it's just all one-off trusteed investing. So it's kind of a game of Tetris, right? Like, so at times I have a little bit more money here where they're like, Matt, I need to get this money out. Like one of my investors, Tim's like, I need to get another $1 million out by the end of the year. And I'm like, well, that's great. You know, let's just wait till we have, you know. So I have that balance of like, sometimes I have more money than I have deals, and sometimes I have more deals than I have money. I don't just have a pot of money sitting here that I'm paying interest on with a hurdle rate. So so I got to always kind of have a good relationship with my investors to know what their liquidity's like. So when, you know, Lath calls me, fictional character Lath, right? When Lath calls me and says, hey, I need to close Friday, I already kind of know, like, great, Tim could do this. Let's look at the deal. Yeah, okay, we can do it Friday.
Right.
You know?
And it's the same pricing regardless of the borrower or the investor.
Pretty much, yeah.
Gotcha.
Yeah.
So one thing I completely forgot. So the brokerage.
Yeah.
What's that about? I mean, you got these other 2 things going on. Talked about the brokerage.
So the brokerage is it's super small. It's just pretty much me, and I have like 5 or 6 agents. Some of those agents are active investors, and I'll provide them with the hard money loans. I started out always having my license, and we always had, one of us along the way always had a broker's license. So we would always get paid to buy our own deal. So it was like, let's just create our own brokerage, right? Because like, you know, so I do have a brokerage now. I think I told you before, I like to think I have 4 buckets now. I have the hard money, the flips, long-term rentals, and then a brokerage. Really, the brokerage just kind of facilitates all the transactions for the, you know, for the flips, for the hard money, and for the long-term rentals. So, you know, I since kind of a little bit of a reorganization last year and a half, I just have my own brokerage now. I just completely made it up. It means nothing. It's called Conrad Cruz Real Estate Services. I bought a duplex from a guy named Conrad. And I'm like, I love his name. You know, I'm like, my name's Matt, right? I want a cool name. So
you're saying Matt's lending's not going to go?
No. And so the brokerage side of it, I call Conrad Cruz, because I'm like, Conrad kind of needs a last name, you know? So it's kind of like the Dos Equis guy. So I kind of have a running joke with the title company. I'm like, dude, Conrad needs his commission check, you know, and he doesn't exist. It's just, so my logo's a palm tree and a house. I like palm trees and houses. So so the brokerage, that's kind of the function of the brokerage, really just to kind of help facilitate.
Kind of there.
And it obviously brings in, you know, a little bit of money from the deals that, you know, the agents do, but it really kind of just is lunch money, kind of covers the nut of certain things.
So let's pretend.
Yeah.
And we've had this conversation before offline.
Yeah.
But let's pretend I was going to start a hard money company in Phoenix.
Okay.
There's a lot of guys here. There's no shortage. I've actually had 2 of them on the show.
Yeah.
Right? So you're going to counsel me, right?
Right.
Matt, I want to start a hard money private lending company.
Right.
What do I do?
Well, I think you might want to first just check with like what legalities there may or may not be involved, right? So I don't know if you're going to need a license here. I think 7 states last time I looked that you need a lending license, a mortgage license to do private loans, hard money loans, being business or commercial in nature, right? Consumer loans, obviously, you're going to need a mortgage license. But some states, most of the states actually do not require you to have a mortgage license to originate business purpose or commercial loans on a single family residence. I don't know in Arizona. I think you probably have to have a license. So if you have to have a license, then you're probably going to have a license underneath a PLM, right? So I would first and foremost check out that, right? Then you got to make sure what you do, you understand how the game works, right?
Yeah.
Who's going to be borrowing the money and what are they going to be doing with it and how are you going to get paid back?
So don't start off as a hard money lender before wholesaling and flipping.
No. You need to have some. I mean, we could go on for hours of stories of guys that maybe lent in second or lent without recording a note or a deed,
Oh, man.
So you've got to understand, obviously, real estate in general, like what collateral looks like, what first lien position looks like, what second lien position looks like. Obviously, you got to have a great relationship with the title company that can help you navigate, some of those issues. And then you got to have money, right? And then you got to get your message out. And then, the hard money is, what does your money look like? I mean, there's so many different ways you can play the game, right? Do you have a fund or are you just sourcing money like I am from, individual investors one at a time? But I would say it's just like flipping. To be successful in doing hard money, you've got to understand what ARVs look like, what maybe a rehab budget looks like, and then obviously have a model that you can follow to, determine whether that guy you're lending to has a successful exit. Which if he has a successful exit, you're probably going to have a successful payback, right? So where things go wrong is somewhere along that process. And that's where it's helped to flip because you can understand where those, things are going to go sideways and at least mitigate for them by the amount of money you lend or know when you got to own it and get involved and help them, correct course.
So you find yourself hand-holding a little bit with some of the flippers.
Oh, 100%.
Yeah.
It's kind of probably that 80-20 rule. Like 80% you kind of forget about. It's like, oh, you paid this off. Congratulations, Like, and then the 20% you're like, why did we do this loan? But as long as we have good values, we're going to get out of it okay, right? But, on a couple right now, I've had to bring in a contractor to help them. Unfortunately, we're foreclosing on a couple of properties. And then, in the parking lot, I was having just like one of those super candid discussions with the borrower, of like, listen, you got to tell people there's not money going to be left over. You've overpriced the home. You've overspent. It's a year on the market. You're going to lose money. And so sometimes people investors, especially if they're new, they get lost in this world because they don't know what they don't know. They think it all looks good on paper from their coaching seminar or whatever, right?
Yeah.
And they think it all looks good. Like, oh, I know what an ARV is. I know what the budget is and blah, blah, blah. But once they get in the middle of it, you kind of lose your head. Some people just lose their minds and they're dealing in this alternate universe. I don't know, like where they want the reality to be different than what it really is.
Of course.
So in this one example, they have this house listed. I'm not lying. It's been listed at between 710 and 730,000 for a year. And I'm like, guys, the market is telling you
they're just
it's priced
waiting
too
for
high.
the market to catch up.
But that's what they say. So, well, we just switched realtors and it's going to be better in the spring. I'm like, yeah, okay, maybe it is, but you're clipping at $5,000 a month, right? Like, so sometimes people need help getting to reality because they can't get there themselves because they haven't been through it before. And, you're so scared of losing money. I mean, everyone's scared of losing money,
of
right?
Course.
You're not doing the flip to lose money. But sometimes the best thing you can do is just
cut your losses.
Cut your losses and move on.
Yeah.
Which I've done plenty of times.
Oh, I have too.
I always tell people, one of my borrowers, he's a real successful flipper in Salt Lake, John Maxim. So if he's listening, he's a stud. But he texted me once. He's like, I'm doing a presentation at the local RIA. Have you ever lost money on a deal? I start laughing. I'm like, which 35 do you want me to case study for you?
Right.
So I've lost plenty of money on deals.
Yeah, we've lost plenty, and there are ones that we commit to, and that's the problem. We're committing to deals that maybe we didn't quite do our due diligence on.
Oh yeah, 100%. I still make the mistake.
Yeah.
Which is kind of like, oh well. Just, volume will help you or kill you, but usually if you're smart, volume's going to save you.
Right.
Because you're going to get just as lucky on some as you are unlucky on some.
Yeah, definitely. So you mentioned there's a few different ways, right? So there's the fund.
Yeah.
There's the catching, the investors one at a time.
Yep.
You got 13 of them.
Yep.
Was there another one, or were those the two primary?
I mean, that's pretty much it unless you have your own funds, which a lot of guys do and go small. Maybe they just have their own IRA or something like that. I know a bunch of guys like that maybe have like $400,000 or $500,000, and they'll just lend that out till they're done, and they won't try to grow beyond that. They'll just be totally content lending their own money.
And then let's just talk about that for an instant, for a second. So if I have this fund and I'm lending out of it, as long as the fund's getting the points and the payments, that's all cool, right? I just can't personally make money off of it.
Oh, if it's in your IRA?
Yeah.
Yeah, right. Like you can't personally benefit from anything other than just your direct investment, so you do got to be careful with your IRA funds. But a lot of our investors are providing their IRA money to invest with us, right? But they're just getting a direct return.
Yeah, I'm talking about the guys that that are using their own money.
Right.
Yeah. Okay, so then what advice would you give someone, again, like let's just say it's me, and I want to start my hard money lending, right? You developed these 13 relationships. How did you go about creating these relationships?
Some of them were established, right? So I go back to when I worked for this self-funded insurance agency, right? So Dave, one, he's just an awesome dude. So you can't replace that. Like I lucked out that he's just an awesome dude that was successful. But then after I left, he became even more successful. And so I rerounded back to him and he's like, Dave, let me tell you what I'm doing now. And so one, I think you got to get a track record with them. And so if you can get a track record with them with your own deals and get them comfortable to know like how it works, just like, when you're flipping, right? You're a lot more comfortable buying your 10th flip than you are your first flip. So you got to get some reps under their belt. So whenever I bring someone new on, I really want to try and get them like as a layup as possible for their first loan so that the experience will be as smooth as possible. Because then they get a little bit of...
You're dating,
right? And then they get a little bit of comfort. They see it come back. That's the one thing I like about our model is it's not just paper money, right? Like when the loan pays off, I'll say, Steve, your loan just paid off. Here's a reconciliation of what we owe you. Does this look good? Yeah, it looks good. Okay, great. Here's your 250 plus interest back. And you actually get it back, right? And then, but I may say in the same day, oh, hey, Steve, by the way, here's a new loan for $250,000. Send it back. So then there is some value and something real in like, it's like getting change back, right? Instead of just paper money, like just a statement showing that you have this money, like they'll see a wire go back and forth. So that builds confidence is ultimately what this does. It builds confidence in the machine, confidence in the process, confidence in our ability to do what we say we're going to do, with underwrite the deal correctly, manage the process, and get the loan paid back.
Right.
And provide a good experience for the borrower. So, and then you'll see every personality is different, right? Just like everybody's blue, red, green, or whatever, right? Like so some investors I would send the same email to, say like, hey, Tim, here's the deal. Would you like to fund $320,000? If he's at his desk, like 2 minutes later, yeah, Matt, let's do it. Maybe a different guy would be like, well, tell me a little bit about the borrower. Does he like color green? What, so you got to be anticipating the hot buttons for your investors, right? Some guys want a little bit of different detail. Some guys don't care. Ultimately, they all want to make sure their money's safe, right? But, so that's how I get them, is just try to get them a layup, communicate with them, give them a realistic update of like when the money might be coming back, talk to them about it, their experience, or they're liking it. And then also, I don't ever want to pry too much, but it's like, well, you just did 200. Do you like this? Would you have other funds that you'd like to commit so I can know to put you in the rotation?
Yeah. So that's great for your first one.
Yeah.
And potentially second one. Are you actively trying to add more to it?
Yes.
Okay. So what are you doing to get more?
Sometimes sometimes I've just the benefit of, I guess, dumb luck, where like I have a couple investors that they'll tell their brother to call me. They'll tell their business associate to call me. They'll tell their friend to call me. So I get referrals from my existing base of investors, because sometimes they're like, oh, I really like what Matt's doing.
Yeah.
They're at lunch with their buddies and they're like, everyone talks about like, what are you doing to invest, right? So sometimes the word just naturally gets spreads around. And then I've tried to like practice my like 30-minute elevator speed, or 30-second, not 30-minute, like 30-second. Yeah, it's a long elevator ride. So I have gotten people on board just through that casual conversation of like, hey, what do you do? Well, I do, hard money lending. Well, what does that look like? And then I'll maybe tell them. And then I'm not like the aggressive closer at all. It'd just be like, well, if you're ever interested in maybe getting involved, let me know. And so then we kind of show them, I'll show them how it works, what the return looks like. And a lot of people jump on board that way.
And then, you were saying like the rates are the rates in Salt Lake. And we've talked about it. Like what you guys charge in Salt Lake.
It's cheap. I know.
Would never fly in Phoenix, right?
It's super affordable.
So what is your typical?
So this is pretty typical for Salt Lake. For a first position deed of trust, first position loan, leverage, maybe 85%, maybe 90% of purchase price. We're at 2 points and 12% for 6 months.
Oh.
Everyone does a little different. There's some guys in town that will do 100%, but they'll match it with a second, and that second's like at 4 and 16. If the value's there, even if we do end up going to 100%, I'll still just do 2 and 12.
Right.
And the one thing we do a little bit different, part of it was because when we started, we didn't realize we were going to be doing a lot of hard money loans, and we didn't want to be a servicer. So if the value's there, which usually it is, I don't require payments because I don't want to collect payments, right? And so sometimes this can be a problem if it goes a little longer because obviously that balance is accruing up. But in general, we don't require payments. So that's one advantage we have.
Yeah, that's a big advantage.
But part of that is like how you pitch it to your investors. Like I pitch it to them because, I just say, hey, you'll get paid when the loan pays off. And they've never done this before. They're okay with that.
Yeah.
So if I tell them we're going to give you a payment on the 5th of every month, you know how many nightmares I'm going to have on the 6th of every month when I don't send them the payment because then I'm going to be harassing, So that's one thing we did to make life easy for ourselves, but it also ends up being a really cool strategic advantage.
Yeah, it is.
Because if we underwrite it right, then, because I've been in their shoes, right? The last thing you want to worry about if you have 4 flips going on is stroking a check for interest payments for $15,000 every month.
The cash flow is killer.
So I'd rather see that money ideally being plowed into the remodel, right? So that they're establishing that ARV as quick as possible because then we all win.
Right.
I'd much rather do that than have someone making me payments and not paying the cabinet guy.
Makes total sense.
What
are you typically borrowing at?
So our hurdle rate to our investors is anywhere between 9 and 10%.
Okay. And that's only when it's withdrawn.
Correct.
It's not all the time.
That's the other advantage to our model, right? It's only being paid while it's being used.
Right.
We have every once in a while experimented with the model of like taking $1 million from a guy and kind of committing like we're going to pay you 9% or whatever it is for the year. But there's a lot of pressure on that because I can't imagine a world where, let's say I had like $30 million sitting here, I'd make some really bad loans.
Yeah. Because
your interest is working against you. You got to get it out. You might be saying yes to loans that you shouldn't be saying yes to just to get the money out.
Yeah. RJ was on a show last week, and he's flipping in like 10 different markets.
That's insanity.
And he was saying, one of the reasons why he made so many bad decisions is because he had all this money he had to use.
It's dangerous.
Yeah.
A lot of money is like you go back and forth over like if I could just have like I think it's super it would be dangerous to have unlimited money. Well, it would be great if you had unlimited money that didn't have a cost to it, right? But when if someone I would turn away if someone said, "Here, here's $10 million, it's at 6%," I'd probably still say no. And if they said $1 million or $2 million, I'd probably be able to manipulate that because I know our deal flow is pretty good. But it did make me a little nervous if we had a big pot of cash sitting there that we had to pay on.
Right. So we talked about on the hard money side, you're lending, right? But now you're pretty busy flipping.
Yep.
So how are you sourcing your deals flipping properties?
So flipping properties, I still hunt the MLS, right? Because I started and I've always hunted the MLS. So there are still deals today on the MLS. I bought one last week on the MLS.
Wow.
Just the regular way. I set up hot sheets, look for keywords, whatever. The one I bought on the MLS recently was one where, it had just been under contract. It fell out of contract. And I just stuck to my price. And over the years too, just in general, I think we bought more properties by being in second or third place than we did being the first offer. So sometimes the best thing you can do is be in second place because that first person might not perform. And then if and we definitely closed on houses that didn't make sense just to keep a relationship with the community that will close.
Right.
Because then we did get that other deal. the next time, you know? And so I buy stuff from wholesalers, guys like you in Salt Lake, you know, guys like Cody that was on, Clay and Brian. I mean, there's a bunch of wholesalers in Utah that are great, that do a great job. So I'll buy stuff from wholesalers. And I've been in it long enough. I have a couple bird dogs that are agents or just whoever that you know, I'll try and be super exclusive with them. When they find a deal, I'll pay them before it closes. Like, I don't want them taking it anywhere else.
Before it closes?
Oh, yeah.
How does that work?
I just like prepay them. I don't care. I'll just prepay them their commission.
Is that paid out of title, or is that paid?
I'd say, Nick, here's your money, bro.
Every little bit helps.
Every little advantage. So just all the traditional ways. One thing I don't do is kind of the foundation for your business and most of your guests is I don't go direct to the seller.
Yeah.
I tried that for a little bit in the short sale frenzy of like sending out mailers and whatever. It's just like, dude, I just couldn't figure it out.
Ricky wants to know, is it traditional to pay for an application when you apply for a hard money loan? For instance, there's a company he mentioned that has a processing application fee for $297.
We don't. I could see how like a bigger institutional company would want to do that for some reason, but no, I don't charge anything until the loan pays. I mean, I don't even collect a fee until the loan pays off.
Yeah, and that's pretty typical. I don't hear a lot of people charging application fees.
No, I think that's kind of a red flag maybe a little bit.
Yeah, I would be concerned by that. Sharice said she'd be open to paying points if there was no monthly payment. Cash flow up front may make the extra point worth it. I agree.
Well, you do the math a little bit. Sometimes where it's like, well, that other guy will give me a little bit more, you know, loan to value. And I'm like, well, let's look at it. If you have a 10 or a 6 month process, and let's say you're borrowing $300,000, you know, that's $20,000 in payments, you know, like, let's figure out a way to get that or a little bit of it up front, you know, and then you don't have to worry about it.
Right.
And if you create enough value, like that property that I was talking about was like $715,000 going on a year. Our loan balance, even after a year and a half with maybe an extension fee here and there, it's only at $458,000. So when I have those conversations with borrowers, they're like, well, what should we do? I'm like very clear, like, keep in mind, we're in the same game, but we're on totally different sides of the field, right? Like, you could probably go another year with accruing interest and I still have like $100,000 equity. Now you're already at negative equity. So, you know, so I guess my point is though, like, I still haven't required them to make one payment in 18 months. I mean, there's $120,000 of interest that's just accrued. I don't care. Right. I mean, my loan's at $450 and the house is easily worth all day long $650, $625.
So it's 6 months, due in 6.
Yep.
And you've had a couple of extension fees in there.
Oh, yeah.
At which point do you start the foreclosure process?
So that's funny. This is very relevant because I was talking to them. They're like, when would you foreclose? And I'm like, listen, I kind of explained the whole value thing, right? I'm like, I'm at $450. You have it listed at $715. Let's just say it sells at $6, which is $100,000 plus what you have it listed at now. I'm still getting like $100,000 in equity above and beyond my full payout. I said, so in some ways, don't pay me back. But I said, the reality is we all need this to move on. So I told them, I said, if you're not going to drop the price, then I'm going to foreclose, right? Because this house needs to sell.
Yeah.
But if they're going to drop the price to $675, I'm going to work with them.
It's like a community banker.
Exactly.
Yeah.
So that's where the key to is communication on both sides. If you're my borrower, just tell me what's going on. Like, you know what? If you screwed up, you blew your rehab budget in Vegas or whatever, just tell me, and then I'll work with you.
Right.
But don't avoid it. Don't give me false realities.
That's how I know for sure we're not doing business again. When people are not returning calls. Or
yeah.
Always someone's in the hospital.
Yes.
All right. So Bernard Mack wants to know, will you continue lending in a market downturn?
Yes. I'd look at it like flipping, right? Like, so I benefited. In flipping, I've lost money on houses, right? But some of that's just because maybe we were doing too many at a time. You know, I always look back and I was like, I actually underwrote that right. We just blew our budget for some reason. But I like to think about it like sometimes like the stock market, it's like dollar cost averaging. You know, if you're always evaluating the deal relevant to like the most recent 6 comps, not getting over your skis and saying, well, the comps tell me it's worth 100, but I think it's going to be worth 120. I mean, that's getting a little bit speculative. If you're always kind of staying within, kind of your underwriting guidelines of. Then I think from a lender standpoint, yeah, there's still exposure, but if I'm getting 10, 15, 20% down payment, they're putting in the rehab, even if the market turns a little bit, like again, we're on two different sides of the table, I think I'm still going to be fine.
Right.
Our average loan amount, so when I calculate what our payoff is, and not the estimated ARV, the actual ARV, like what it's recording on
Today.
the MLS, we're averaging about 65 to 70% of final loan to value. So that final, even with the accrued interest. So we still are kind of ending up on average with a 30% cushion in the loan amount. So in theory, like prices could drop 10% and, we're going to get paid back. Now, the deal might not produce a profit, but.
Yeah, the smart lenders I've heard always make sure they get paid back.
But going back to the dollar, just kind of finish that thought, like you don't know, no one has a crystal ball, right?
Mm-hmm.
When you're buying and buying and buying and it's going up, yeah, you're going to get hurt right here, right? But you're going to benefit because you don't know, like we benefited big time. We didn't know when the bottom was, but we were just buying the whole time. And the cycle's quick enough that, when you're projecting maybe a $20,000 profit, maybe you make 10, who cares, right? Because then when the bottom hits and you're thinking it's going to be a 20, all of a sudden you're like, wow, we just made 50. Whoa, we just doubled, we just screwed up and paid twice in rehab, but we still made 40, right? And so.
Oh, I remember those times when that shift. I mean, my next door neighbor's house, I still regret not buying it. You know, just I don't know what happened, but it felt like overnight every house in Phoenix appreciated $40K.
Yeah, right.
And just missed that little window. So Bernard also wants to know, what's your criteria for your long-term rentals versus flipping?
So I have, and I don't know them all by myself. I have partners on some of them. I have 46 different rentals right now. And so I've been super spoiled. So that's why I've had a hard time buying rentals this last year, because whether I knew it or not, every rental I've got was basically doing the BRRRR method. At first I didn't realize I was doing the BRRRR method, but it just kind of worked out. And then I was more intentional about it. And now I kind of can't stomach leaving money in a rental, because even the 2 apartments we have, we bought them with private money or cash, fixed them up, re-rented them at higher rates, got commercial bank refinance loans. I mean, I'm into my rentals legitimately no money out of pocket. Now, for a year or two there, I was out of pocket money, but then we refinanced them. So my criteria, you asked, and maybe you'll get to it, but one of my favorite books is The Millionaire Real Estate Investor by Gary Keller. So I think you'll be money in the bank if you stick to that 1% rule. Right now it's not even possible.
It is in the other half of the country.
Oh, sure. Yeah. Then that's a whole another debate about how smart is it to have 6 different single family home rentals in Michigan, right? Anyway, but that aren't appreciating, that are cash flowing, that who knows who's managing them. But so if you can hit the 1% rule, assuming you get a decent 30-year fixed, you're going to be money in the bank, right?
Oh, 100%.
Yeah.
And then Trill REI wants to know, how will you vet a private lender?
So I would ask for referrals, and I would just in general with anything, if it's really complicated and it's not straightforward, there might be a red flag, right? I always tell people this is a complicated process, but at the end of the day, it's very, very simple. You have a house, you want to flip it, you have a plan. Let's verify that plan. Let's do the deal, right? Obviously we need to understand terms, and then there's the nuance of how are we going to close it? Where are you going to go? But if we're talking really complicated terms or structure, there's probably a red flag. It's 2 and 12 for 6 months. You know what? Get the house done. Let's follow up along the way. If you need extension, talk to me. We'll do an extension. If you get stuck, let me know. I don't have any hidden appraisal fees or doc prep fees, or it's just 2 and 12. This is my other theory. One, be super easy to work with, but I'd rather do 20 loans with Steve Trang than one and destroy him on the one. Right? When you're day 181, it's okay, here's 5-point extension fee. I'm not going to do that, because I'd rather do a lot of loans with you than just the one. And that's proven to be pretty good, because then you get, people talk. It's hey, he's easy to work with. He's reasonable. So I get a lot of referrals, which I really, really appreciate.
Right. Oh, that's the best way to know they're doing a good job. Kiki wants to know, why do you think it's so hard for first-time flippers to get funding?
Maybe finding the deal. Let's say you have the deal, though. Let's say you have a good deal. Like, one quick aside, like I track all of our borrowers, and our average borrower purchase price to ARV is about 70%, right? So that 70% rule holds pretty true, right? Like 70% of ARV, you're kind of hunting in the right neighborhood as a flipper, depending on the rehab, that's going to be a deal that makes sense. Now, I think where it makes 100% sense is take ARV times 80% minus the rehab, right? Like that is probably going to be a deal that you can make money on no matter what. So let's say you fit that criteria, you have the money. Where I see borrowers, first-time homeowners getting stuck is really pretty much just maybe a down payment or rehab fund requirement. You need three pieces, right? You need to have the house, you need to have money, and then you need to have a plan, which is usually a contractor. Like if you have those three things, which I think the most important one is getting a good deal on the house, you're going to find the money, and if you're smart enough and resourceful enough, you're going to figure out who's going to help you rehab it.
Right.
So I always give people a real extreme example. Like out of the gate, we're 85% of cost, not 70% of some subjective, arguable ARV, but 85% of cost. But I mean, I'll fund 100% for people at times. The extreme example is if you getting a house for 100, it needs 25 in repair, and it's going to ARV at 250. I'll give you 100% plus the rehab money. Right? Because it's no different than buying it at 180, putting 30 down, and having the ARV. So a lot of it's depending on how good of a deal you're getting. Yeah. If you're getting a crappy deal, we may be at 70% of cost.
Let's see. So Amar wants to know approximately how much of your average rental costs on your flips and average turnaround. So I guess your renovation on your flips, how much what's your typical?
Man, there's no such thing as like a cheap, carpet and paint anymore. One, it's good for for the people buying it because the competition's increased the quality of the remodels for sure. And so it just depends. I haven't done a flip. Well, I did one true carpet and paint rehab that was going to be like 10, but I would bet my average budget's like 40 to 45.
Really?
Yeah.
Wow.
Is that a lot or not?
It's a lot.
Dude, I just spent, here's like the fail story. I just did this flip. Freaking awesome house. I got sideways on it though. I should have just torn the thing down because it had a huge like 6-car garage. So I was just like, this was just last year. I was just in love with this garage. And so I'm like, the garage will sell the house. But the house was this old 1950s, like I needed to dig out the basement. I should have just torn the house down and built a new house. But I got into that. I was like the money trap, right? So I spent $135,000 on a 1,500 square foot house. I dug a foot out of the basement, like I did the roof, the inspectors, whole story with the city inspectors. Anyway, here's your successful flipping story. 135 grand in rehab. I lost $2,000 on the deal. So that's a really good return.
That's not too bad considering how much you probably went over budget.
Oh, yeah.
Matthew Apple wants to know what states do you fund in?
So 90 to 95% of everything's in Salt Lake. Kind of going back to your question of how would you set it up, right? Like you got to be familiar with the state you're working in. So I'm a licensed loan officer in Utah. I'm licensed under a mortgage entity, and 95% of our stuff's in Utah. So I have done some random loans out of state, like, for guys that I know from Utah that I can trust that are in other states. But I don't do a lot of that, because it's a little bit of a gray area for me because I'm not as comfortable with the laws or whatever there. So I may be going a little bit rogue in some of those areas. So I have done, maybe 10 different states, but we're talking like one loan here or there. But the other reason to stick local is just like, you flip local. You can go see it, touch it, feel it. Your investors have confidence, it.
So running your operation, your organization, as far as just the hard money side, what's your monthly overhead in running that operation?
Not a lot.
Very little.
Nothing. I mean, I rent an office for $275 a month.
Really?
I sponsor the local RIAs. I speak at the RIAs. I network as much as I can. There's not a lot of, if you count overhead as far as my cost of money, but we're talking like sticks and bricks.
Right.
Yeah, there's
just
not a lot.
Just monthly keeping your business running.
Yeah.
Wow, okay.
My cell phone.
Go to Verizon or whatever.
My texting plan.
What's your biggest struggle right now?
So my biggest struggle right now, I wrote that down. It's definitely balancing growth with risk, right? So, and scaling, right? How many bring on help, how to bring them on, how to train them. That I would say is my biggest struggle is just deciding, sometimes less is more, sometimes more is better, and where I've been deficient over the years is I have not been good. Like I look at what you do and I'm just like, you leverage so well, like your time and your relationships, and you delegate, and you're really good at the who versus the how.
Yeah.
I've always been kind of more of like, oh, it'll take me 5 minutes, I'll just do it, right? Like, oh, I can do this spreadsheet. I can do this. I can do that. I can do that. And then all of a sudden you're doing everything. And so Coach has helped me a ton to learn and to implement, not just learn, but actually do more of the who's going to help me versus
Where
the how.
are you on the Colby test?
I can't remember my numbers. I'm pretty even, though. I'm like sixes.
Who was our coach?
Adrian Duffy.
Yeah, she's going to be pissed.
Yeah.
She's going to be very disappointed.
Well, I know. I get that sticker every time.
I know.
Some things you remember really well. You can give me a street, an address in Salt Lake, and I can walk you through it, but I don't remember some stuff very well.
So I'm just really fortunate. We're talking about the delegation.
Yeah.
Right? Like it might look like, man, it's really good at delegating, but really I'm just really lazy, right? Like, growing up, oldest of 6 boys, and I remember like one of the quotes is, if you want to figure out how to get it done easily, give it to the lazy guy.
Right.
And he'll figure out how to get it done in a
that's
streamlined
so
way, right? And so it might look like, man, it's really cool what he's done, but I've been really lazy for a long time. And I just force myself by starting all these different things. It's kind of like, I think like Dan Sullivan talks about, is my job is just to get the boulder going.
Right.
And once that boulder's going, it's like, all right, you 2, you 3, keep that boulder going. And I'm going to go start another boulder.
Well, and part over the years maybe been a pride thing. We're like, well, I want to be the one that does it all, right?
Yeah.
That's like not real smart, right? Because, I think actually I was reading a Dan Sullivan quote the other day that said something to the effect, and I know I'm going to get it wrong, but like, the proof of your impact is like how many people can do everything else really well. I'm saying that wrong, but you know what I'm saying. Like,
oh yeah, that sounds great.
You know what I mean? Like, that's where you're successful, is because really you've empowered a bunch of other people. And so, naturally for me flipping, I still can't like hook up a toilet. So naturally I had no skills in that regard. So that was a natural, like, find the who, right? Who's going to do this? But with all the other like back end office stuff or whatever, I'm like, well, I can probably figure that out,
Right.
and half the time it ends up
You could.
being kind of broken and slow. And so managing growth versus risk is probably, I would say, the thing that keeps me up at night.
Yeah.
Because I want to go. One thing I love about hard money and flipping is like, it's like even though it's maddening, like it's kind of like crack, right? I love that like new call, let's do this deal Friday. Like, I love the action. That's where I'm not real good at like a land developer, because it's like super patient, wait for the planning commission to get back to you. I'm like, Steve, you want to do this Friday? Let's do it Friday. Let's go. And then
Right.
the next one.
Yeah, no, the driver in you.
Yeah.
What is your superpower?
So as much as I say I like going, I feel like I am pretty patient. I feel like I'm pretty consistent at what I do every day. Sometimes the consistency is not a positive thing, right? But I'm at least fairly consistent. Yeah, I think, I'm fairly positive and optimistic, right? So I think that keeps you moving in the right direction. I don't really say I have a major superpower other than just kind of keep it going every day.
Darren Hardy says that's the most important one. What is the greatest lesson you've learned?
Just to keep going, right? So like going back to that story of like, having that thought of living it, like tomorrow's always a new day, right? The sun's always going to come up, like sometimes you have never try to make a really important decision at night, right? Because you usually have like darker thoughts and like, but the sun always comes up. It's always going to come up. And if all ended tomorrow, like you got to this point, you can just build it back up again.
Right.
Not that you want to be reckless, but it's like, and I didn't start from zero, but in a way it felt like I started from zero. It's like, hey, not that you want to, but you just start all over again. If you were good enough to get to where you're at, why wouldn't you be good enough to start? Like, so there is a natural fear of like, oh, if I lost it all, what would happen? It's like, I don't know, you just do it again.
Just do it again. Awesome. Is there a book that you've gifted more than any other?
I don't know if I've gifted, but I talked about, I've definitely gifted that Millionaire Real Estate Investor book. One book that I just absolutely loved was Unbroken, the Louis Zamperini story. If anyone has not read that, you got to read that. Talk about a dude that was just like, I mean, he was awesome. Louis Zamperini, that's such a cool story. And Ray Dalio Principles, it's like a Bible. It's like thick.
Really?
But that has some of the best common sense business advice. I'd listen to it on audio, and then he has a great Instagram now that has kind of like Darren Daly has like he has like kind of a daily kind of snippet of his kind of rules and principles. He's the CEO of Bridgewater. So awesome book there. I mean, I go on for days about books, but I'd say kind of those two books.
Gotcha. All right. So I'm going to let you think about what last thoughts you want to leave listeners with while I make a couple of quick announcements.
You got it.
Guys, so it's the 18th. Next week is Christmas, and then it's New Year's after that. So we're off for the rest of the year. We're going to be doing a couple of replays from those that we hadn't played yet. And then we're going to be starting the year off strong with Corey Peterson, the Big Kahuna, talking about multifamily. And as you guys are well aware, Max and I are doing our workshop on January 10th through 12th. If you guys want to check it out, go to www.disruptors.com, DISRUPTORS, and see if the workshop makes sense for you. And with that, last thoughts.
Last thoughts is keep networking, keep providing value, keep being honest and transparent with other, and have a good attitude, and just keep going for it.
Yeah. Awesome. If someone wants to get a hold of you, how will they do that?
Cell phone's the best one, 801-244-3888.
That's crazy. That's suicide. Thank you. Thank you so
much.
Thank
you, Steve. Appreciate it, buddy.
Thank you guys for watching.